With the start of the brand new tax year, the stock market is looking quite good. Over the past month, the S&P 500 is up by over 1.9%, making new highs it seems every other day. The FTSE 100 is up by 3% and the FTSE 250 is up by over 1.2%. So how has all this news affected my trading 212 portfolio? In this video, I will reveal everything. So here is my trading 212 invest account. And if I click onto this button here, you can see that my account value is £13,189.75. Now this is significantly less than last year. This is because I have just transferred £20,000 from here into my Trading 212 ISA account. So stay tuned for that, as I'm going to show you my brand new Trading 212 ISA, which I've maxed out as soon as the tax year opened. So in terms of free funds, I still have quite a bit at £11,768.75. I had invested this, and then on Friday, just yesterday, I did sell out on one of my funds. So of course I haven't learned my lesson on trading, but I still do this, and I'm going to show you exactly my strategy and what I've returned over the past month. Now if you want to sign up to Trading 212 and receive a free share, use the link in my description down below. If you've signed up recently and haven't received a free share, use my promo code JUBAIR and you should receive a free share. Now if I go into my history, you can see that my total realized profit and loss is £2,316. Last month this was £1,779, meaning that I've made another £500 in terms of actual capital gains. And this is through actually selling, as you can see, the S&P 500, the GSPX by iShares, and I found out that there is a lot of volatility that I want to make the most out of. And currently I did sell out of all my holdings of the S&P 500 just before, you know, it had a 1.5% crash, which I'm really happy about. But you can't always time the market, and I do not recommend anyone to actually follow my strategy. So as you can see, my past month's portfolio is all over the place. You can see at one point it was 27,285, and then it was 9,000, and now it's 1,421 pounds. But this is of course because Trading 212 does calculate your returns in a very odd manner. It doesn't take into consideration any cash you have. So this portfolio only reflects the value of all my holdings if I were to sell them at that instant. So what I haven't really noticed about Trading 212 before is now they have an allocation bar. You can see by value what your biggest holdings are. You also do notice that these funds are sorted alphabetically. Now I wish Trading 212 also sorted by value like Freetrade does, but I guess we have to just take it as it is. So my first holding is in Walt Disney and I have 0.12 shares in that. Another thing that I've noticed about Trading 212 is that they have a new bar here, and what this grey bar here does is show you your average price that you've bought in, which I'm really happy about, and I like that as a new feature. If it's not new, I apologize, I've just not noticed that before. But anyway, over the past month, Walt Disney has been doing really good, up by 7.79%. We know that the S&P 500 has been doing incredibly well this year, and so a lot of these companies are doing well too. You can see that in total my return is a positive 29.76%, and that is a gain of £2.75. Walt Disney does currently pay a dividend yield of 0.63%, very small, and as you can see from their financials, 2023 was a much better year than 2022 or 2021. From a balance sheet perspective, we can see that the number of assets is higher than the total number of liabilities, and from a cash flow perspective, you can see that operating income in 2023 was really good. Please take these financials with a pinch of salt, as these are only at a glance figures. You can dive into more financials here, but I would suggest actually just doing your research externally, such as Yahoo Finance or something like that, because this might not be the most up-to-date financials, especially not including anything earned in 2024. So next I have 35.1 shares in Vodafone. Over the past month, Vodafone is going down and up like a roller coaster, and they are subsequently down by 2.17% over the past month. In my portfolio, they are down by 24.78%, so that's a loss of £7.93. They pay a massive dividend yield of 11%. I'm surprised it hasn't been cut yet. From their financials, you can see that net income has gone up from 2022. Revenue looks still quite high. Balance sheets, again, you can see assets on paper anyway are higher than the liabilities. And from a cash flow perspective, you can see financing takes quite a bit of a hit, and operating income does seem to be less than 2022. If you haven't noticed already, there is this news feed that you can find out more about specific companies. For example, Berenberg raises Vodafone, keeps at hold rating. You can see stuff like that, which does affect the share price more often than not. So next I have 0.91 shares in the Vanguard Germany All Cap. So they have over the past month gone up by 2.2%, which is not too bad at all. In my portfolio overall, they're up by 5.18%. That is a gain of £1.07. So next I have 0.17 shares in Tesla. Over the past month, as you can see, they've had quite a bit of a roller coaster. You can also notice, because this is an American company, the graph is all over the place. This is because Trading 212 have recently actually introduced 24/5 trading, which means 24 hours a day, 5 days a week, Monday through Friday, you can trade. So after hours, there are a lot of, jumps. So this is why there is so much volatility on this screen. And if you want to find out more about 24/5 trading, check this video over here. But anyway, over the past month, they are down by 7.22%. In my portfolio overall, they are down by a massive 19.66%. That's a loss of £5.70. As I've always said, Tesla is one of those companies that is highly speculative, and that's why I never invest a lot into individual stocks, or at least in Tesla. You can see that, the value does seem to change a lot. I'm not saying you can't make money from it, but there is a certain risk that I personally am not willing to take when it comes to companies like Tesla. No current dividend yield, and as you can see from the financials, they have been doing pretty well. Revenue has gone up near parabolically, so has net income. Balance sheets, you can see total number of assets much higher than liabilities. And from a cash flow perspective, you can see the cost of investing has been high last year, and operating income does seem to go a bit down. So another automobile company, for some reason I have so many. Next I have 33.5 shares in Rolls-Royce. Over the past month, up by a magnificent 11.28%. Very happy with that. There's a lot of social stuff for Rolls-Royce, so I'm guessing the community really likes Rolls-Royce. There's also the newsfeed here. But in any case, in my portfolio, they are up by 157.93%, which is very good. That is a positive return of £86.48. They don't currently pay a dividend yield, and as you can see from their financials, revenue has gone up, net income has gone up quite a bit. Balance sheets, you can see liabilities much higher than total number of assets, but that isn't always a terrible thing. Some companies do take on more debt because they have the backing of something, whether it's investors or something like that. From a cash flow perspective, you can see operating income has significantly gone up, and the cost of financing has also quite reduced. So next I have 2.13 shares in PayPal. Over the past month, they are up by a brilliant 11.81%. In my portfolio overall, they are up by 5.47%. That is a gain of £5.70. They don't currently pay a dividend yield, and as you can see from their income statement, their revenue has gone up and so has their net income. From a balance sheet perspective, you can see the total number of assets again does exceed the number of liabilities, at least on paper. But from a cash flow perspective, you can see that operating income is down. However, we've seen that at the end of 2022, a lot of these financial banking companies did take quite a bit of a hit. So next I have 2.32 shares in Orange. Over the past month, again, good result, up by 1.51%. In my portfolio overall, they are down by 4.3%. That is a loss of 96 whole pence. They pay a really good dividend yield of 6.64%. And as you can see from the financials, revenue looks quite high. Net income seems to be the same. From a balance sheet perspective, we can see the total number of assets on paper at least exceeds their liabilities. With such companies, it is very important to actually go in and see what they name as their assets. For example, here they put cash and cash equivalents at 2.5 billion euros, but the term cash equivalents can be used quite loosely for stuff like vouchers and credit, which actually, when it comes to liquidation, doesn't actually pay the bills. From a cash flow perspective, we can see operating income still quite high. The cost of investing has reduced and the cost of financing does seem to have increased. Next, I have 0.09 shares in Nvidia. Over the past month, down by 0.72%. Of course, Nvidia had one of the biggest bull runs in recent history. I was eyeing up Nvidia at 112-ish, and now of course it's nearly $1,000 per share, which is absolutely crazy. You can see that my average was $293, still high at that time it seemed. You can see right at the peak here, but of course if I had bought more during the dip, I would have been a very happy person, but hindsight is 2020. And right now it's 2024. Overall, in my portfolio, up by a massive 196.53%. That is a gain of £41.92. They paid the smallest dividend yield of 0.02%. And from the financials, you can see absolutely killing it, near parabolic increase in revenue. Net income has like quadrupled, at least it seems. Balance sheets, you can see that the total number of assets greatly exceeds liabilities, looking very good on the financial side here with Nvidia. And from a cash flow perspective, you can see operating income, of course, has been incredibly high, which can easily cover both investing and financing. Next I have 0.4 shares in Nike, and over the past month not looking good again, down by 8.81%. In my portfolio overall they are down by 13.75%. That is a loss of £4.55. They pay a small dividend yield of 1.66%, and as you can see from the balance sheets, 2024 data isn't here. However, the revenue does seem to be increasing from 2022 to 2023. From a balance sheet perspective, you can see the number of assets seem to be decreasing, maybe a big sell-off there. From a cash flow perspective, you can see the cost of financing has been incredibly high in the past year. Next I have 0.49 shares in National Grid. Over the past month it was actually going really well for them until the 4th of April and everything went down. Overall they are down by 2.29%. In my portfolio overall they are up by 3.02%. That's a 15p gain only, very small holding there. They pay a good dividend yield of 5.32%, and from a cash flow perspective you can see net income and revenue is a lot higher than last year, especially the net income. From a balance sheet perspective you can see the number of assets has decreased slightly, but so has liabilities. And from a cash flow perspective you can see the cost of investing has gone down since 2022 and the financing definitely has increased. So next I have 0.07 shares in Microsoft. Over the past month Microsoft is up by a massive 5.99%. Of course, being one of the Magnificent Seven, Microsoft is doing incredibly well. So is the S&P 500 overall as a result. You can see that in my portfolio Microsoft are up by 9.16%. That is a small gain of £2.08. They pay a small dividend yield of 0.72%. And from the income statement you can see that revenue has gone up, net income stayed quite similar. From a balance sheet perspective you can see the number of assets has significantly increased. And from a cash flow perspective we can see that the cost of financing has reduced and operating income is still quite high. Next I have 0.38 shares in Mercedes-Benz. Over the past month up by a nice 2.43%. In my portfolio overall they are up by a massive 19.67%. That is a gain of £4.08. They pay a really good dividend yield of 7.09%. And from their income statement you can see that revenue is quite high, so is net income. From a balance sheet perspective you can see assets and liabilities are looking really good. And from a cash flow perspective you can see that operating income has gone down every year since 2021 unfortunately, but the cost of financing does seem to have eased on the company. So next, by value, this is one of my biggest holdings. It is in Lloyds Banking Group and I have 343 shares in them. Over the past month Lloyds Banking Group has done incredibly well, up by 10.06%. In my portfolio overall they are up by 20.14%, which I'm really happy about. That is a gain of £30.72. You can see that they pay a good dividend yield of 5.11%. And income statement's not really complete here. From the balance sheet you can see high number of assets and liabilities, so they're quite even there. This is a finance company, banking company, so we would kind of expect this. From a cash flow perspective we can see operating income has taken a huge hit in 2023. So until 2024 figures are actually released we can't actually know where the future of this company is potentially going. Next we have 6.24 shares in Royal Mail. Over the past month you can see Royal Mail went down all the way, and then on the 20th of March it seems to have rallied back up again. You can see that it hit almost break even at my average buying point almost exactly, and then it went up, which means I should be in profit. So overall I am up by 11.38%. That is a gain of £1.51. They don't currently pay a dividend yield, but we can see the revenue is really high. Net income has seemed to gone down. From a balance sheet perspective you can see a mass sell-off in assets and the liabilities are not that much lower. From a cash flow perspective we can see operating income has decreased significantly. And from the news which isn't mentioned here, I see that Royal Mail are having difficulties in their delivery service. They're thinking that they should make the second class stamp even worse than it currently is. I've only just read the headlines on that, so of course I can't give you the full story. But it seems like overall the business is not doing as well as it has been doing in the past. Next I have 23.17 shares in IAG. Over the past month up by a fantastic 15.01%. As you can see last month I was below my average price of 151 pence. Now it is all the way up to 171 pence. So of course, profit up by 13.27% overall, gain of £4.66. No dividend yield currently, and from their income statement you can see revenue has increased very well. It's taking off, so to speak, because of course it is an airline company. Balance sheets, you can see high number of liabilities compared to assets, but again, running an airline business, you're going to have to take on a lot of debt and a lot of fuel and storage and stuff like that, which costs a lot of money. From a cash flow perspective, we can see since 2021 a lot more operating income and a lot more money is being spent on financing. Next, I have 3.16 shares in H&M. Over the past month, again, H&M has been doing incredibly well. Peaked on the 27th of March, and then you can see quite a bit of a decline, but overall it has since last month passed my average buy-in price, which means I'm in profit, and I'm overall in profit by 13.17%. That is a gain of £4.54. They pay a decent dividend yield of 3.86%, and as you can see from their income statement, revenue is really high and net income has increased since 2022. From a balance sheet perspective, you can see that the number of assets does exceed their liabilities. Again, be careful about what they actually class as cash equivalents and stuff like that. Of course, you can go more into the balance sheets if you really want to find out for yourself. And from a cash flow perspective, we can see operating income is up from 2021 and the cost of financing does seem to have eased quite a bit. So next I have 0.29 shares in GlaxoSmithKline. Over the past month, they are down by 2.43%. In my portfolio overall, however, they are up by 22.67%. Can't complain about that. That is a positive return of only 90 pence, as this is a very small holding. They pay a decent dividend yield of 3.54%, and as you can see from their income statement, their revenue has increased slightly, but their net income is down. Balance sheets, you can see the number of assets has been decreasing year on year, and from a cash flow perspective, you can see the cost of investing has decreased, but the cost of financing has increased and operating income has decreased. Next, I have 2 shares in Direct Line Insurance. Over the past month, not doing too well at all, down by a massive 13.32%. So this has gone down past my average buy-in price of 198 pence. Therefore, in my portfolio, they are down overall by 4.75%, and that is a loss of 19 pence. And financials are not complete here. Balance sheets, you can see number of assets is greater than the liabilities. And from a cash flow perspective, you can see operating income has reduced quite significantly, and investing seems to have brought back some money, and the cost of financing has reduced significantly. Next, I have Deutsche Lufthansa, 18.1 shares in them. Over the past month, they are down by 1.64%, and as you can see, they were doing quite well until about the 28th of March. In my portfolio overall, they are down by a massive 19.58%. That is a loss of £26.18. They pay a decent dividend yield of 4.15%, and as you can see from their income statement, revenue has gone up quite nicely, so has net income. From a balance sheet perspective, you can see number of assets higher than liabilities, but they are quite close to each other, of course being an airline company. And from a cash flow perspective, you can see that operating income is down. However, cost of investing and financing seems to have reduced slightly. Next, I have Deutsche Bank and 1 share in them. Over the past month, doing incredibly well, up by 17.47%. In my portfolio overall, they are up by a nice 19.7%. That is a gain of £2.11. They have an okay dividend yield of 3.05%. Income statement not complete, and from a balance sheet perspective, you can see high number of liabilities and assets, just with any other banking group. From a cash flow perspective, you can see that operating income has increased since 2021, and the cost of investing has reduced very much so. Next, I have 1.5 shares in Delivery Hero. Over the past month, absolutely did great. I was down a lot last month, but this time they have gone up by 35.24%. Absolutely amazing there. In my portfolio overall, they're up by 7.19%. Very happy to see this, and as a return, that is £2.77. They don't currently pay a dividend yield, and as you can see from their financials, nothing for 2023 here. Next, I have exactly 1 share in Carnival. Over the past month, they were doing quite well up until 27th of March, and then a huge decline. So overall, they are down by 5.41% over the month. In my portfolio, however, overall, overall I am still up by 53.29%. That is a gain of £3.73. Nice to see that. They pay a decent dividend yield of 3.52%, and as you can see, revenue has increased year on year substantially. And from a balance sheet perspective, we can see that the total number of assets does cover liabilities, although a bit close for me. And from a cash flow perspective, we can see operating income significantly up from 2021. So next I have 21.05 shares in British Petroleum. Over the past month, doing really well, up by 5.83%. In my portfolio overall, they are down by 3.68%, unfortunately, and that is a return of negative £4.07. They pay a decent dividend yield of 4.39%, and as you can see from the financials income statement, revenue has decreased quite a bit. Net income does seem to have increased from 2022, and from a balance sheet perspective, you can see number of assets does cover liabilities. Cash flow, we can see operating is down, however cost of financing does seem to be down from 2022 too. Next I have 0.37 shares in BMW. Over the past month, doing really well at plus 4.31%. In my portfolio overall, they're up by 12.48%. That is a return of £4.02. They pay a good dividend yield of 5.23%, and as you can see from the financials, revenue has increased quite nicely. From a balance sheet perspective, assets greatly exceed the number of liabilities. And looking at cash flow, we can see the cost of financing has reduced, but operating income has also reduced. Next I have 1.37 shares in Aston Martin. Over the past month, again, Aston Martin not doing too good at all, just up barely by 0.19%. In my portfolio overall, I am up by 10.55%. That is a positive return of 21 pence. No current dividend yield. If we look at their financials income statement, we can see that their revenue is up, but net income still in the negative. Balance sheets, we can see assets covering liabilities at a glance anyway. From a cash flow perspective, we can see that operating does seem to be up from 2022. However, cost of investing has increased quite significantly. So next I have 0.02 shares in ASML. Quite flatlining over the past month, just down by 0.71%. In my portfolio overall, they are still up by 34.95%. That is a positive return of £4.24. They pay a very small dividend yield of 0.67%, but as you can see from the revenue going up really nicely, so is their net income. From a balance sheet perspective, you can see the number of assets is growing quite nicely, liabilities staying quite similar, if not dropping from 2022. And from a cash flow perspective, we can see operating income has been decreasing, but the cost of financing does also seem to have been decreasing too. Next, I have a few companies from the Magnificent Seven all lined up alphabetically, and the first one is Apple at 0.42%. Over the past month, Apple has not been doing too good at all. They are just barely up by 0.44%. You can see that they peaked for this month at the 20th of March. I actually have been buying Apple through the Robinhood app that is new to the UK, and all the free shares that I've gotten has been in Apple just because I see it going down. And of course I do expect at some point that Apple will go back to, you know, its peak, if not more, of course being one of the Magnificent Seven companies. Again, past performance is not a indicator for future returns, but I do personally expect it to go up, and I'm not too worried about that. In my portfolio overall, very surprisingly, I'm down by 5.27%, and that is a loss of £3.19. They pay a small dividend yield of 0.57%, and as you can see from the income statement, revenue is really high, so is their net income. Balance sheets, again, assets very high, liabilities very high, but again, they take a lot of debt anyway, so I wouldn't worry too much about that. If you look at their liabilities, a lot of it is in debt, short-term debt, and other liabilities. So yeah, I wouldn't worry too much about that. Apple does have a lot of cash. If we look at cash, it has 28.36 billion, and of course it has assets and other things like that too. From a cash flow perspective, you can see operating income has decreased, still well over $100 billion, but we can see that the cost of investing has also decreased. Next, we have 1.24 shares in Amazon. Over the past month, doing really well, up by 6.54%. In my portfolio overall, up by a massive 75.05%. That is a return of £78.44. No current dividend yield, and as you can see from the income statement, revenue is incredibly high. Net income also seems to be up from 2022. From a balance sheet perspective, again, companies like this, the balance sheets are really good. good, high number of assets compared to liabilities. Again, a lot of their liabilities is going to be stuff like debt, which of course they can pay off. They do have a lot in cash anyway. And from a cash flow perspective, you can see operating income is incredibly high, can completely cover all the other expenses. Next I have Alphabet, which is pretty much Google. I have 0.47 shares in them. Over the past month, Alphabet has been doing really good, up by 16.26%. In my portfolio overall, they're up by 15.68%. That is a return of £7.73. No current dividend yield. However, you can see from the income statement, revenue is very high. Net income also looks very good. And from a balance sheet perspective, we can see total number of assets incredibly high, way higher than their liabilities. Here's a quick look into their assets. Cash and short terms, 110 billion. And you can see the liabilities are also accounts payable and a lot of debt, which of course they can pay off. And here from a cash flow perspective, you can see operating income is incredibly high. Cost of financing is also high, but yes, they can afford it. And lastly, another magnificent 7 is AMD at only 0.03 shares. Over the past month, AMD has fallen like a giant, down by 18.73%. However, in my portfolio overall, I am up still by 117%. Sounds crazy to say. That is a gain of only £2.34. And I only put in £2 into this investment anyway. They don't currently pay a dividend yield. And as you can see from the income statement, revenue is really high. Net income does seem to be decreasing, however. From a balance sheet perspective, you can see total number of assets greatly exceeds their liabilities. And from a cash flow perspective, you can see operating income has reduced, but you can also see the cost of financing has reduced. Also, now I'm going to show you my trading 212 ISA, and because this is the start of the new tax year, things are going to look very different here. Now, if I go and press this button here, you can see that my account value is £43,535. All of this is in cash currently, unfortunately. You can see that my current year's ISA utilization is 100%, and as I'm filming this on the first of the tax year, I have maxed out the account as soon as possible. You can see that I have £43,535 in cash. You can see I'm earning from that a daily interest of over £6.04. Yesterday I was paid £3.27, but of course today I've added a further £20,000. Now this is very nice to get this interest every single day, even on the weekends. However, I would be very silly to not keep this money invested, and of course I do intend to buy into this fund here, the S&P 500. Over the past week, as you can see, I did actually manage to, get out of this trouble bit here. I actually sold out maybe somewhere around here, and when it dipped, I was out of the markets, and for that reason, I'm not seeing a negative here. Of course, in hindsight, I did sell way too early, and I should have just held. I do expect in the very short term for it to go back up to around £8.86. Again, not financial advice or anything like that. If I'm very lucky enough and it hits £8.72 again, I'm going to be actually executing at this. I'm just going to cancel this right now because, of course, I have more cash. Now I can actually buy a higher amount. Let's go to limit and show you what I usually do. Just move this here and then press £8.72. Now I'm going to go to the maximum amount I can buy. Let's say 4,600. This sounds like a very huge amount, £40,000 in one limit order. Press review order, and then of course I press send by order, and then I'm going to do it again because for some reason trading 212 is really weird in not letting you use all your funds at the same time. So again, £8.72. Move the bar as far as it can go. 360. Review order, send by order, and you'll see that for some reason I still have £284 left. So I'm going to go back into the S&P 500, press buy again, limit, move the bar, press £8.72, and then move all the way I can, and that's going to be 30 shares. Review order, send by order. Now you can see I have 3 limit orders. If I go back, you can see that I have only now £22.85 in free funds. I guess I could buy it again, but I'm not really bothered. In terms of profit and loss, you can see that I've made a profit and loss of £2,777, which I am happy about. But of course, if I kept all that money in the S&P 500, I would have made a lot more money. However, I've been buying and selling throughout the bad periods, and I've been making over 10% every year. So actually, one of the benefits of actually doing this and keeping in cash is, of course, when there is a dip, I am not going to be affected at all, and I'm still going to be earning that 5.2% interest at this present time. I wouldn't recommend this. I would just say buy, keep buying and holding until you want to retire, because that is the proven strategy into maximizing your gains. But for some reason, I'm too obsessed with trying to time the market, and that is going to be my downfall, but I'm completely okay with taking that risk. So make sure to check out some of my other videos, and I will see you in the next video.